Welcome to Think Smart with TMFG. I'm Mike Connon. This is Carlo Cansino, Senior Financial Advisor with the McClelland Financial Group of Assante Capital Management. So this week, there's two things going around. Number one, Blue Jays.
Yes, let's go Jays, go.
So we're doing this on Halloween, so we don't know when you're going to be viewing this, so hopefully we're going to be the World Series champions.
By the time you hear this, hopefully, we'll be wearing all Blue Jays blue.
Yeah. The other thing that's going on right now in the news, what do you hear a lot about, Carlo?
Hearing a lot about additional tariffs being put on Canada, a lot of issues that Trump is having with these anti-tariff ads that Ontario put on. So Trump is reacting once again.
A lot of stuff is going on. I mean, Carney right now has been over in Asia, and Trump has been over, and everyone's trying to make trade deals. Mm-hmm. And it's so difficult now because what's real in the news? Do you know?
Oh, well, I guess it depends on the news outlet that you're listening to.
It's a bit of work, you know. You try all these different ways to get your news and these different methods, and nothing's reliable anymore. Mm-hmm. You listen to Fox, you get one story. You listen to CNN, you get another story. You go through TikTok, you get no story. You go through
exactly.
So it's very difficult to find out what's true. A lot of rumors are out there. You know, the one rumor that's interesting, I heard we're going to be driving Chinese cars in Canada in the near future.
Yeah, if you look on the roads right now, you see a lot of EVs that are not necessarily made in China, but that's likely going to change.
Yeah, right now there's been a huge tariff on Chinese cars, which means that basically they're not imported to Canada at all. I was over in Asia about 6-8 months ago, and I saw a BYD dealer, and I went and take a look around. Very impressive vehicles, and from people that I know in Europe that have rented cars, sometimes they get some of these cars in the rental agency. They said it's one of the nicest cars they've driven.
Yeah, absolutely. I spent some time in Portugal this summer, and on the highways as we were driving through different towns, I noticed this beautiful looking vehicle, a little bit unique, and it was BYD, and I thought that must be the Chinese EV. I think it's Build Your Dream. Or something to that effect.
I'm not sure, but they're fantastic as far as their quality. Everything is great on them. And what's been going on is lately, there's Canada and the U.S. made a deal years ago that they put a massive tax on Chinese or tariff on Chinese vehicles.
Right.
Basically keep them out because we're trying to go and protect the U.S. auto industry. But, if trade talks fall apart, there's no need to protect the U.S. auto industry if they're going to take it away from Canada.
Exactly.
Open the doors, right?
Yes.
So we'll see how that goes. Other things is, China, we heard they're going to cut off all the rare earth metals to the U.S. and bring U.S. to a standstill of production of everything.
Yeah, I mean, the U.S. utilizes the rare earth metals in many different products, definitely in the batteries that they're creating
almost everything now, right?
Exactly.
So and I think China has the majority of the upwards of 90% of the rare earth metals are coming from China. So it's funny, we put all these tariffs out, but you forget you're dependent on some things, right?
Right.
So we hear 100% tariffs going because Trump has put 100% tariffs on this country, on that country. So it's very difficult to figure out which country is which.
Right.
Even with Canada, we hear all these big tariffs, but we forget a lot of our goods are protected. I think 85% of our goods are still under the free trade agreements. Yep. So sometimes the news tends to exaggerate things. So what's the actual issue here? How much do we export to the U.S.?
Yeah, Mike, about 3/4 of Canada's exports go to the U.S. So that's a huge number.
75%. Yeah. So there is an issue.
Yes. So exactly.
Some people try to treat this lightly and everything, but if let's say the North American or whatever it's called now, the free trade agreement between that disappeared, and there was no more free trade agreement, there would be an issue because we're very dependent on the U.S. Whether good, whether bad, we are very dependent on the U.S. to export to.
Absolutely. When 3/4 of our goods are exported to the U.S., I mean, the proximity is there, the number of consumers in the U.S., that's going to have a major impact on the livelihood of those companies.
This stuff can't get fixed overnight either.
For sure.
You can't turn on a switch and say, okay, 75% of what we export is going to go to the U.S. Let's just change countries.
Yeah, exactly.
It's not going to happen that quickly. Yeah. And there's a lot of supply change between the two countries, which is one of the big issues. It's not only, let's say, you build something in Canada, you sell it to the States. A lot of things like auto parts are going back several times between them. I have friends in different businesses. Some of them are if you take a business like oil, some oils will go and be produced in Canada, but have to be refined in the U.S. So they send it down the U.S. Then they send it back in Canada bottle, and then they distribute over there. But again, it's passing back to the border. So having the tariff-free border made this very seamless.
Exactly.
If you start to put these tariffs in this type of thing, we're going to take normal production of things, and both sides lose out.
Yeah, just adding on frictional costs that just are going to impact the end user.
Yeah. Let's look at the good that's coming out of this, right?
Okay.
We always we hear all the bad and the fear. Yeah. So what are the good that is coming out of this?
Well, I think, when we think back to a lot of the countries that were emerging markets are now becoming second or first world nations. So China and India are going to move from, in air quotes, third world countries into second and first world countries.
Yeah, we always think of China and Russia as communist countries. And, the only communist country that's really left is sort of Cuba.
Yeah, right.
The other ones have sort of embraced a bit of capitalism because they realize that's grown the country quite a bit. So there's still a communist tilt to it, but they're not as strict as they were back, let's say, 30 or 40 years ago. You look at China right now. China has the most vehicles on the road in the world. They have 440 million vehicles.
That does not surprising given the population.
I think they got 1.5 billion people.
Yeah, exactly.
So it's but what you've seen is when we talked about China 20 years ago, you couldn't imagine someone in China being able to afford a vehicle. It was just incomprehensible, right? When we thought about China, I remember starting to do research 20 or 30 years ago, and their average family lived on, it was something like $20 a week, right? And now they're all driving cars. So there's been a massive change in that marketplace. And with that, that gives tremendous opportunity as new people to get in trade partners with. Right? So as they begin to expand, people go, as long as we can produce things, we don't necessarily have to rely on the U.S.
Correct.
It's easier, but we don't need to. Right. If you look at cars, it's funny. We said China has 440 million. U.S. has 283 million cars, and Canada has 26 million cars.
Again, falling in line with a portion of the population.
Yeah. So I guess the big question is where to invest? Like with all the stuff we know, we're getting all this information. Where should I have my money?
Yeah, no, and that's typically the question that clients have is, with all the tariff talk essentially starting in the U.S., should we be avoiding the U.S.? And that's just not the case.
Yeah, it's always been, I remember hearing when I started in this, never bet against the U.S.
Right.
And that was a long time ago someone said that, and it's always been true. People always get down on the U.S., but you forget that most people who want opportunity end up, migrating to the U.S. because it's a very capitalist system which rewards rewards businesses.
Of course.
So people like to get their businesses set up. We look at all these companies. You look at Google. Were they born in the U.S.? No, but they're in the U.S. Elon Musk, was he born in the U.S.? No, nope. But he's in the U.S. So when you start to look at all these people from around the world, they want to establish their business in the U.S.
Absolutely.
And, that may, tariffs and everything, move it over. It may start to deplete over the years, but it's not going to happen overnight.
Definitely. I mean, when we think about it, regardless of what's happening in the economy from a political standpoint or, just from an economic standpoint, good companies adapt to what's going on. And, given the size of the consumer population in the U.S., you never want to bet against them.
Yeah. International exposure, also very important. Areas like China, India that we talked about, many years ago, it was very difficult to invest in China because there are so many walls and gaps and accounting principles, and China basically didn't want investors. As time moves on, they're going to become more easy to invest money into. It's funny because China always made up in the portfolio, was it 1 to 2%?
Yeah, exactly.
So, something very small compared. They were the second largest GDP, and they probably will become the largest GDP in the world. But when you look at it as a sort of part of the economic markets, it was very low. The investable economic markets. That's because the majority of China was owned by the government.
That's it. And that's one thing that people don't understand. There's a separation between economy and market. Like you said, the economy in China was the second largest, but the market was very small. Again, to your point, being a communist country, the state owned the bulk of the companies, didn't allow for a lot of international ownership.
But with Hong Kong becoming part of China, that sort of opened them up into the capital markets. And they seem to realize that works a bit better than their way that they went for the last 50 years. They see some light in that method of investing, so they'll probably continue to move toward that. Inside our portfolios, we generally do a world portfolio.
Yes.
Market weighted per, let's say, percentage. If U.S. is 50% of the world, it would be 50% of the overall portfolio. And if if England is 4%, it would be 4, whatever those percentages are, they line up in the portfolio. The only thing we do a little bit differently than that is we have what we call home bias.
Correct.
And every country, if you go to Australia, you're going to be overweight in Australia. If you live there, if you live in England, you're going to be overweighted to England. People in the U.S. are overweighted to the U.S. Now, we talk about the reasons for home bias. And what I always say is you have to spend the money in the country you live.
Correct.
So you want your portfolio to be related to the economy in which you're going to spend your money.
Yep.
So all of a sudden, if you picked a country and let's say it had done very well, right? And it was the only country that did well in the world, right? And you decided that you weren't going to take a home bias. It's a small country, right? And all of a sudden, the rest of the world's doing poorly. You have all your money outside of it.
Yes.
Your cost of living is going to go up with your economy.
Yes.
And if you have all your money outside of your country and you have no relationship of your growth of your finances to the country in which you have to spend it in, you're going to have a problem going down the road.
Absolutely. And that's just another portion of volatility that we try to avoid. When you add in, just volatility of the markets, but then the currency exchange, by having the majority of our investment, having a larger percentage in Canada, you're minimizing that exchange volatility.
Yeah, there's no currency risk. Plus, there's favorable tax treatment.
Yeah, exactly.
Canada, Canadian investment is going to help you out quite a bit from a tax point of view. When we're speaking of currencies, people ask, what type of effect on currencies is this going to have?
Right.
And it's a hard one to answer.
For sure.
Currencies are, the way I always describe currencies is they're not an investment, they're an equilibrium, which means, investments are meant to go up over a period of time. Currencies are never meant to go up. It's just they always stay flat over time. That's by definition what they have to do.
Right.
One will win at one time, one will win at the other time. If there's two people in a stock, there will be two winners because it's going up.
Yes.
Currency, for every winner, there has to be a loser.
Exactly.
Right? So currencies are a great equalizer upon what's going to happen, but it's very difficult to predict. So we don't play too much in that game.
Yeah, exactly.
We even wonder. I'm an anti-crypto guy,
Right.
and I haven't really big in it. But in the world, if this trade continues to go between countries, is there room for some type of cryptocurrency that's, let's say, non-conformant to any one currency? Something that's probably not even going to be a cryptocurrency that exists today. So I would never say go out and buy a thing because I don't think it's going to be Bitcoin. I don't think it's going to be another one.
Right.
But somewhere, if world trade becomes as prevalent as we think it may, hey, maybe there's room for something like that.
Well, for sure. When you think about it, when you're trying to do international trade and there's so much political influence on what currencies look like, having a cryptocurrency or something that's not regulated by central banks makes sense. I don't know how that works.
I don't either.
but yeah, it does lend itself to muse about having an unregulated currency.
So I guess what's the bright side of this? This was probably the kick that Canada needed.
Right.
Because we've been too reliant on simplicity for a long period of time where we just did trade with the U.S. because it was very convenient and easy. But this has got us to broaden our horizons on who we're going to trade with. I always think, could you imagine being a business with just one customer?
Right.
We're in a financial practice. I've seen financial practices that take care of one giant client.
Right.
Wouldn't you be worried every day when you woke up?
Yeah. No, exactly. I mean, we preach diversification to all of our clients. And, when we think about our country and 75% of the exports going to one country, well, we're seeing the negatives with that now.
It would be an insane business model to run. So, again, when you say with countries, you talk about countries being run like a business, you do have to take that. And right now we have a country that has almost one trading partner.
Right.
And for the future of the country and the future of all of us, we hope they're going to diversify and get better trading partners going forward.
I agree.
Well, that brings us to another episode of Think Smart with TMFG. Thank you very much and have a great day.